Okay, so with question 5, this is where we're looking specifically at our salary journals. Now, in this scenario, what they've done is they've given you the salary journal, and then they've left out some bits and pieces of information which you need to complete. So, firstly, they're testing, do you understand the information that's provided to you to complete a salary journal, and do you know what amounts you need to add together to complete a salary journal? So that was the first thing they wanted you to do. Then the second thing that we had to do is then complete certain general ledger accounts. So the first thing is complete the missing amounts A to J for the above tables, and you round it up to the nearest whole rand. Okay, so we're rounding it up. And then they asked you to complete the general ledger accounts, and they tell you totaling and balancing accounts is not required, and the payment to SARS and the pension fund is not required. So they only want you to do the salary journal transactions. You don't have to balance the accounts. You do not have to show the payment to SARS amounts. And then you have to complete the EMP 201 control accounts. So that is where we account for all the taxes that we have to pay over to SARS. You have the pension fund account, and you have the SCL contributions. So those are the 3 general ledger accounts. So we're going to start off with A to J, and then we'll move on to the general ledger accounts and how to account for that. So if we go to the information, let's quickly read the additional information at the top. So they tell you we employ 3 employees and run the payroll on the 25th of each month. So that's generally when we would capture it. Employees are paid by a magnetic tape, so similar to EFT in this scenario, and an EMP 201 is submitted on the last day of each month. So the EMP 201 will only be on the 30th or the 31st, together with the check for the amount owing. Then they tell you we pay a pension fund fringe benefit equal to half of the employee's own pension fund contribution, and they match the employee's medical aid contribution rand for rand. So we pay an amount half to what their pension fund contribution is on their behalf, the company, and we pay 1-to-1 for their medical aid contributions. And then they just tell you the amount owing is paid on the last day of the month. So they just say when the payments generally occur. Now, if we look at the information in the first table, we will see they've listed the name of the employees. They are listing the basic salary, their commissions. Now, the pension fund fringe benefit is what the company pays on behalf of the employee. The pension fund deduction is what the employee pays to the pension fund, and that is removed from their salary. Okay, so the first one they want you to work out is A. Now, if the company contributes half of what I contribute to the pension fund as well, how much would A have been? How would you have calculated that amount? Okay, so let me repeat that. The company, so you contribute a certain amount to the pension fund. The company contributes half of what you normally contribute. So what would A be? Okay, so multiply by 2. Okay, so that's correct. So how we will work it out, A would be the 350 multiplied with 2, because we actually contribute 2 times what our employer contributed. So that would have been, A would have been 700 Rand. Okay, then they show you the pay-as-you-earn SCL remuneration. Now this is based on these amounts here in the beginning. We would work out your SCL remuneration, and your UIF remuneration is also based on these amounts. But if you earn more than 14,872, you cap it at that amount. Now, because of the fact that Savida earned less than 14,000, her UIF remuneration would be calculated as what? What would her UIF remuneration amount be? What is it made up of? Okay, so UIF remuneration is generally calculated using your basic salary and any commission you've earned. We do not include the fringe benefits when we do the UIF remuneration. Okay? So B would have been her basic salary of 10,000 plus the commission that she'd earned would have given you 13,000. Now, Rohan and Yavashi, if you look here, so Rohan earned 25 plus 5 would have been 30, which is more than the maximum. So that is why when you look at this, their UIF remuneration amount is limited to 14,872. Okay, so that's why it's that amount there. Okay, then the last column. Okay, we've got the pay-as-you-earn payable. We've got medical aid contributions. Now this is the employee's contribution. Now the fringe benefit is what the employer pays into their medical aid. Now they said the employer matches 1-to-1 their medical aid. So how much would C then be? If the employer matches what the employee pays to his medical aid, how much money will C be? Okay, so 500,000, that's correct, guys. So C is 500. Now you can see, based on this table, if you don't understand what the information is, you will not know how to calculate A, B, and C, and then you will struggle to complete the rest of the question. Now if we move on, now we're looking at the salaries journal. Now the salaries journal is captured, the information is captured from the information on the first column or first table. That information is what you use to capture your salary journal. So let's see what information is missing. Okay, so gross salary, what would D be? How is the gross salary calculated again? Okay, so the class says we take the basic salary, which is the 10,000 plus the commission of 3,000. So the gross salary is 13,000 Rand. Okay, UIF. What is the UIF amount for Savida? Okay, let's quickly go back. What did we say was the UIF remuneration on the previous table? So B on the previous table was 13,000. That's the UIF remuneration. So when we calculate UIF, we take that UIF remuneration, which is the 13,000, which was B, and we multiply it with 1% to get to 130 Rand. That will be captured under the deductions. Now, under the deductions, we're only showing the employee's contribution at this stage. Okay. If we look at the employer's contribution, H is the employer's contribution. H is equivalent to what E is, okay, which is the 130 Rand. So in terms of law, whatever the employee contributes, the employer will match them exactly the same. So whatever is under E will also be under H. Okay, so that you could also do simultaneously. Okay, if we look at the pension fund, what is the pension fund contribution of Savida? So if we go back to the table, what was Savida's pension fund contribution based on this first table? What did we say it is? How much did we calculate? The 700, yes. Yes, so the 700, that's correct. So her pension fund contribution is the same as her pension fund deduction. So that is the 700, which was the amount we calculated in A. Okay, that's how you got to that. Now, how do we calculate the net salary amount? What do we have to do to get to the net salary? Okay, so that's gross salary less the deductions. Now, if you do the calculation, you should get to an amount of 10,570. Okay, so H we've already done. It's the same as the amount in E. Now, how do we calculate the SDL? What remuneration is SDL based on? Okay, let me scroll up again. So based on the table here, you take the pay as you earn SDL column to work out the SDL amount. So we multiply, it's also 1% of that remuneration. Okay, so we take the 12,650 multiplied with 1% gives us, and now we have to round it up, so it's 127. Because they said round it to the nearest rand. And then the medical aid employer's contribution. So we said the employer matches what we pay over to our medical aid. So what would J then be? J would be 500 Rand, which would be exactly the same as the medical aid that was deducted. Okay, and that is how you would complete this table. Do you guys have any questions on A to J before we move on to the T accounts? Yes. Sorry? Okay, so the STL, I'm just going to repeat that. The STL is calculated. We take the pay as you earn an STL remuneration amount that is provided. Okay? And you multiply it with 1% to get to the STL amount that the employer needs to pay over to SARS. Okay. Okay, now to complete these accounts, your EMP 201 control account, the information we would require to complete that is we would have to get the total for the pay as you earn, the total for the UIF, SDL accounts. Okay, so those are the taxes that we need to pay over to SARS. That is the information we would require for the EMP 201. So I'm just going to stop sharing this and then I'm going to open the Excel file for you guys. Okay, so using the information we had on that PDF, for the EMP 201 control account, it's a liability account. It's what I will have to pay over to SARS. Now, what you have to capture here is you start with the salaries expenses. So this is the pay as you earn amount that was deducted from the employees. And then you go add each and every employee's amounts together. I'm just going to do this just to make it a bit bigger for you guys. Okay, so you take each and every employee's pay as you earn deduction that was on the second table that was provided. So you add them together and you get an amount of 3,700. Now that is a salary expense. Then the next one is the salary expense, which is the UIF. So that's the UIF portion that's deducted off an employee's account. So that was next to the pay as you earn column in the under deductions. You also add those amounts together for the 3 employees to get to a value of 428. Then the UIF contributions. This is the amount that the employer now pays over to SARS on your behalf. And that was in the salary journals, those last 4 columns, which says employer's contributions. That is where you find that UIF amount. And these two needs to be exactly the same. They're always the same amounts. And then the STL contribution is what the employer paid over for each employee for STL, and this you would also find on your table. So I've just put in here. So the first 2 is your employee contributions, whereas the last 2 is your employer contributions. Okay, so that's just important to note. So the salary expenses is what employees pay over. UIF and ACL contributions is additional amounts that the employer pay over on our behalf, and we create an expense account for those. Then the pension fund account is the liability account that we pay over to the pension fund. So that is the pension fund we've taken from the employee plus the pension fund that is contributed by the employer that we will pay over to the pension fund at the end of the day. So what we do is we firstly account for what did we deduct from the employee's salary. So that is the pension fund column under our deductions on the salary journals. Will give us 3,500 Rand. Then the next item we capture is what did the employer now actually pay over. And that is called a pension fund contribution. So that's the additional expense your employer will have. Now in this scenario, they said for every 1 Rand we contribute as an employee, the employer contributes half a Rand. So that's why this value is only half of that. So this is your employee contribution, that is your employer contribution. Just going to make it slightly smaller so you can see all the information on one screen. Okay, so the total amount for our pension fund that we need to pay over at the end of the month would be the 5,250 Rand. And then the STL contributions will equal exactly what we've got in our EMP 201 account, that these two would agree. So I take what I've had in the EMP 201 control account, so what the employer is going to pay over to SARS. So I credit that, and then I debit the expense account, which is the STL contribution with the same amount. And that is how you record it in our accounts. Okay, let me just make it smaller, then you can see all of it in one. Okay, so this is how you capture those transactions that they've asked for. Do you have any questions on these general ledger accounts? Are you okay with this? Will you be able to do this? Because they will ask you these. The guys online, are you okay with these general ledger accounts? Do you have any questions? Okay, so Mappa lady, what do you want me to re-explain with the SDL? What don't you understand? You can put on your mic if you want. Okay, so my lady asked that we just re-explain the SDL ledger account. Okay, so with SDL, so your SDL and your UIF contributions, that is done on behalf of the employer. This is money that they pay in addition to your normal salary. So if we just go, let me see if I share this, if you guys can see it. Do you guys see the PDF? I'm just going to share the PDF again. Okay, so if we look at the PDF amount, the PDF, if we look at the salary journals, this shows, this first bit shows the gross salary. So this is the amount of money that you earn per month as an employee. Then they show what is deducted from your salary before they pay your net amount over to you. Now, the employer's contribution. This is what the employee is required by law or based on the company policy to pay in addition to what your net salary is. Okay, so this is added benefits you receive as an employee. Now, these four accounts here at the end, the employer's contribution, is not captured as part of the salary information for your net salary. So we need to create the liability as well as the expense account for these four accounts there at the end. So that's why we've got the SDL contribution. So we capture the liability under the EMP 201 control account. But because this SDL was never included in these taxes that was deducted from the employee, I need to now create a debit account, which is the expense account, to reflect how much additional expenses the employer has as a result of the fact that they need to pay over SDL as per SARS rules. So that's why when we do the general ledger accounts, I'm just going to share the Excel again. Okay, so that's when we do the general ledger account. When we did the EMP 201, just make sure they can see it. Okay, so when we did the EMP 201, these two amounts is salary expenses. That is what is deducted from your salary. That is part of your package to the company. Now the UIF contribution here, as well as the SDL contribution, that is what your employer pays over in addition to your normal salary. Now, because it's not included in that net amount they pay over, we need to now reflect this separately to show the additional expense in our business. And that is where this SDL contribution account comes from, to reflect the additional expense that our company has now incurred as a result of law and SARS requiring a company to pay over UIF and SDL. And that's why we've got this SDL contributions. So this is an expense, just going to put here expense account so that you know this is expense. This is a liability account. So that's why we do the additional SDL contribution account, to account for this additional expense that the company has incurred that they are paying over to SARS. Because if we don't bring in this expense account, we will not have a credit, a debit for the credit that we've reflected that we need to pay SARS. Okay, so Mapelevi, that's the reason behind it. Do you understand that? Okay, great.